This is London with Bitcoin Spike. Let's go through the details. Hit the like button if you trade Bitcoin. Let's talk about the reversal we're seeing on the 5-minute time frame. A fan reversal. Allow me to go through the details. A very important pattern, often overlooked, very textbook. Guys, hit the like button if you're trading Bitcoin. It lets me know. Guys, I love when I see a lot of likes because I know people are trading Bitcoin on the daily. I'm also going to go through not only the cross trend line, the resistance to support. Boom. I've been focused on the daily. You see why. Look at this, just absolutely in force right now. The resistance to the support, bam, that has been your nemesis thus far. I'm also going to discuss, I'm going to discuss the pickup tactic for Bitcoin. I want to shout out to J Mac. First of all, J Mac is in the back, VIP. Look at J Mac's charts, guys. Look at this, bam. J Mac, that's what's up, my man. That is how you draw a chart. That is VIP in the back. Look at the MACD we're going through. Boom, every time frame. What a trade day. Cash money. Guys, big trades. Boom. Gotta show you guys. Not that you'll emulate it without the skill set, so that you'll be advised of what the market is capable of. $108,000. Boom. Guys, don't emulate it unless you have the skills. But yes, this move, boom, boom, boom. Here, we're going to talk about the specifics in terms of the fan reversal. We're going to talk about the daily. I'm also going to tell you, very important, click on the indicators, go BB, add that Bollinger Band. Why is that? Why a Bollinger Band? Well, we're going to discuss what that strategy is going to be for you to pick up your next, let's say to get a signal. Everybody wants a signal. I'm going to tell you, everybody wants a signal, right? Let's change this midline function. I'm going to go through a strategy right now, recognized by the New York Institute of Finance. It's not fail-safe. It's not a guarantee, but it is a institutionally recognized strategy for Bollinger Band. Let's go through that as we see the action on the bottom of the band. Now, in terms of the fan reversal, let's do that on the 5-minute, then let's go through this tactic for you to gauge your next entry, and I want to log this with VIP. Very important, not just with the New York Institute of Finance. And I want to shout out to everybody. Thank you for the comments, by the way. Guys, you're getting it done. That's good, except there are a few guys that aren't VIP yet. You don't know what you're missing out on. You don't know what you're missing out on, guys. I want you in my trade group. I'm in the trade group, okay? That's the bottom line. We have a good trade group. We want you with our team. Guys, now, level of resistance, boom, to support. This area here is called the seat of the fan. Pay attention. That centralized array, okay, that's let's say where that array begins here, bam. You see that is called the seat of the fan. We align out a level of resistance, boom, flip to support. We go back to that array function here, bam, the seat of the fan for the resistance, boom, to support. You'll see that inside level of resistance, boom, to support. Then we have that next level out, the resistance right in this level, boom, to support. Do you see that continually respected? The resistance flip, bam, to support. Absolutely. Then what do we have, guys? Another level of resistance, right? Flipped, bam, into support. Now, the top level has frustrated. Yes, guys, has frustrated. This is kind of, let's say, a very hot zone to be involved in. We're watching for the dynamics to justify the following move. Since buyers failed to hold this ultimate level of resistance up above as support, the challenge now is a bit greater. I'm going to say it's a bit greater in terms of getting up and over this additional threshold. If you do not trade fans, you are not trading. I'm going to go ahead and say, if you do not trade fans, you are not trading, guys. Pay attention. This is the type of stuff we focus on in the back with VIP. Now, the rising wedge feature on the 5-minute, I will let you know that fans can battle and beat. They can beat a rising wedge. Bottom line, we trade them all the time. Follow your momentum. Momentum is looking good. I have to tell you guys, MACD on the 4-hourly is turned around looking good. 8-hourly turned around looking good. 30 minutes a little bit troublesome. Got to tell you guys, 30 minutes and that 1-hourly is kind of nodding off. It's kind of like going to sleep there. But we need the daily. The daily is the biggest concern in terms of momentum. As I talk about a tactic right now, an institutionally recognized tactic, as we will look at this. Yes, you understand. Left-hand side here. The framework of the bear flag. You've heard it enough, haven't you? You've heard it. Bear flag, bear, everyone, bear flag. Let's talk about a tactic for a pickup, okay? Let's get into this. Now, on the Bollinger Band, I have this pink line as that midline 20. Pay attention. This is good stuff. Guys, don't miss out on this. Let's go to the 8 hourly. 8 hourly, okay? You'll see that the big difference between the daily, let's go daily here, okay, with that 20 moving averages, that's the midline of the upper and lower band, okay? The standard deviation, right? They say 92 to 95% of all the price action will fall between the lower and the upper band. What most people don't realize is the purpose of the 20 moving average, okay? As we look at the daily, how could we create a signal? Well, we'd have to cross over the 20 moving average. If and when we cross over the 20 moving average, the traders who engage in Bollinger Band tactics, again, recognized by New York Institute of Finance, if we can successfully set a candle on the other side of, and pay attention, this gets very interesting in one moment, guys, as I dig into lower time frames, over the 20 moving average, boom, we set a candle. What becomes the target? The top line, guys, the top band, let's say the top band, not top line, but the top, I was going to say top line threshold, but that Bollinger Band along the top. Now, in terms of from the daily, let's swing down into the 8 hourly. I'm going to do this. It's very important because on the daily, that 20 moving average is 23,130. Okay, now it's lower, guys, on the 8 hourly. It's 22,550. Okay, so we can apply this to a different time frame other than the daily. Let's go to the 4 hourly. Pardon me, guys. This is where things become important. This is where, guys, this is the VIP difference. This is Bitcoin spike. You know we caught the bottom formation. This is the type of trade tactic that I like to see VIP involved in, a 4-hour time frame. We have failed to set a candle up and over the 20 moving average. In fact, it's been that perfect level of resistance as we've tried to power up and through this fan feature. So I've brought to you the 5-minute time frame. I have to say, in terms of this getting a 4-hourly up and through this zone is, guys, going to be exactly in line with that trade tactic recognized by the New York Institute of Finance, wherein, okay, step one is set a candle up and over the 20. For those of you who are seriously interested, it's going to depend on what type of candle you set. It's going to depend on what type of candle you set. I don't want to go down that road. It's a long road. Don't go down the rabbit hole, guys. But in terms of that, what I'll say is, for those of you who are very well versed in candlesticks, you're going to have an advantage. We'll work on that through the residual of 2022. Right now, what we're looking at is contact on that 20 moving average on the 4-hourly is a potential signal generated for a long up to this top Bollinger Band. Boom, if we can set a candle up and over. Just look at the interaction here previously on the 4-hourly. It's a sweet time frame. We're excited about VIP. We're excited about trading with, guys, with trades like this. Come on. This is the market to be in. I have to tell you, we're really excited about 2022. I'm excited to bring you this trade tactic. Let's watch how it works. I will tell you, anytime that you're involved on a different time frame and applying the Bollinger Band strategy, I would tell you to back test it. Back test it on that specific time frame. You'll see, for instance, on the hourly, we had some problems with this specific cross the threshold of the 20 and automatically hit into the top line of the Bollinger Band. You're going to find that there are certain time frames where you're seeing more consistency. The 30-minute is a solid one. I have to tell you, we know that in the back in VIP. The 30-minute that's a cruiser for us, guys. That's it's not super easy, but it's just we cruise on the 30-minute with the 20 moving average. Do you see that? Cross over the 20, boom, opposite band. Cross under, boom, to the opposite band. Cross over. A little bit of problem in this area. That's a 1 for 3 thus far. We would count the interaction in this zone as a positive confirmation of the 20 moving average and its role or purpose. Opposite band, cross opposite band, reinforcement to the same band. Look at this, down to the opposite band. Just do your back testing on the 30-minute. Take a look at that, then bring it forward to the 4-hourly. I would recommend you do that, and never blindly entering, but do recognize it's a good strategy, guys. Now, in terms of joining our group, I want to say shout out to the VIP. It's been a great weekend. Again, we want you to join, guys. There's some of you, I won't name you by name, but we want you to join. Hit that join button. I want you in my trade group, guys. And I say my trade group because I'm a member of VIP. But I am VIP after you join. And we can't wait to get you guys in the back. We're going to be trading. Bottom line, if you can respond to that first pinned tweet, let me know I'm VIP. I will put you in the back. We'll put you in the winner's circle, get you started on 100 rounds. And guys, this is the place to be. You know this. I'm just excited. Look at this chart. I'm going to tell you, if you got this kind of stuff going on in your wherever you're at, guys, I'm going to tell you there's some money somewhere. If you have a chart that looks like this in whatever room you're putting together, there's some money somewhere. Somebody's trading the heck out of this stuff. This is quality TA. I do say so myself. You guys take care of yourself. It is a great VIP weekend, and I'm excited to be able to bring you another update. Let's go. We got that daily momentum, and I will tell you, I told you, and I have to go through this. Here it is. Here it is, and I have to do this. You guys know we have to do this. This is it. All right. Now, in terms of the Nasdaq, in terms of the Dow, in terms of the S&P, I mean, this is it. I could have thrown this on real heavy in the beginning. I decided not to. I'm going to go through this real quickly. I want you to understand where we are at. For those of you who stay through on these videos, some people know, well, London's going to throw something in at the end. You betcha. I'm going to do it at the end. This is it. This Nasdaq chart is it. Why? Because it's a bump and run pattern. It is a sweet runner of a bullish framework that we have broken out of on let's take this Bollinger Band away. Probably wonderfully useful. If you want to apply and do some back testing on it, I would state that, guys. Take a look at that. But looking at the framework, the support to resistance, guys, this is a heck of a bump and run pattern. This is big time. This is the lead-in phase. This is the first bump. This is the second bump. Why do they call it a bump and run? Well, let's take a look at this, guys. Why would they call this? This is a lead-in phase. This is the macro chart on the Nasdaq. I want you to appreciate, as we're looking at Jackson Hole this week, as we're looking at the Fed, as we're looking at inflation, this is it. Check this out. Now, on the Nasdaq, we've broken out of, you guys know, not financial advice, etc. It is, it's a security-driven market. We'll say that. That's why we focus on Bitcoin. We enjoy that. In terms of the breakout here, this would be the lead-in phase. Lead-in for the bump. Boom. Bump number one. Bump number two. Well, where's the run? Where's the run, guys? Oh, that's the run, the bump and run. I see. Ah, the bump, guys, a double bump and the run. Well, I see. Do you understand why they call it a bump and run pattern? We say rock the bells. I'm going to tell you that. We say rock the bell because it looks like a bell formation, and they like to rock, bam, to the upside. Now, with that said, we are currently in, and this is just why I say this is it, okay, in terms of the Nasdaq. And for correlation purposes, we go through this for correlation purposes only, okay, in terms of the Nasdaq. Understand, we have broken out of the bump and run pattern in a bearish feature. We don't like that, guys. Bulls don't like to break out in bearish features. This can roll over with just guys, without too much trouble. It's already in a bearish expanding leading diagonal. We don't like that. I'm going to tell you, it's tough. We would prefer to be breaking out bull on bull on bull, boom, and we're running to the upside, that bump and that run. Double bump run, bam. So what I'm going to say is the following. Whereas we have broken out, and this is why it's such a great week, guys, such a great week to be in the market. Look at the SPX. Look at S&P 500. The S&P 500 has not broken out yet. Uh-oh, they have not broken out yet, guys. Take a look at this. Whereas on the Nasdaq, We've broken out clearly. I'll even look at regular versus logarithmic. It's not going to matter for the S&P. Regular versus logarithmic. No, you have not broken out. In fact, on the S&P, you are at resistance. Boom. Now, yes, it's a very bullish pattern, but understand as you look at the difference between the Nasdaq, which is just, I've been telling you, potentially on a runaway pattern. It could just get out of the building. Boom. Look at the S&P 500 for purposes of overall market interrelatedness, intermarket factors that we have to consider. Some of you know that very well. Level of resistance, boom. We're still contained on the S&P. What about the Dow? The Dow is the mediator. Watch this. The Dow is really nice at kind of explaining, well, if you had to take the Nasdaq super bullish, however, with a bearish expression, if you had to look at that and let's say compare it with the S&P 500. The S&P 500, well, it's not broken out yet. Okay, well, let's look at the Dow. Now, first of all, if you don't recognize that the Dow had one of the nicest bull flags that you've seen, count it, guys, in terms of the number of months, number of years, boom. These can set off bull runs. Bam. A nice little baby bull flag. We'd love to see that. Noted this during this time frame. Very important. You keep your eyes peeled for moves like that. You're just not going to see that many perfect bull flags. Now, why is this the mediator? Well, between the S&P 500, between the Nasdaq, right? Nasdaq is off to the races potentially, right? S&P 500 still contained within. Why is the Dow the mediator? Well, let's take a look at this. Look at the Dow patterning. Just a nice, I'd say, coalescence, a nice mediation. Let's say that, a nice mediation, a nice happy medium between, well, okay, the Dow shows that we have broken out. It has broken out of its pattern. However, take a look at a small detail. If on the Dow you recognize, yes, we have a bump and run pattern, okay? We have this broadening formation, the bell. I love just watching this, guys, on the we always have, and you know this, we always have Bitcoin. I've got 10, 15 screens, 24/7, 365. We trade. Guys, what we do. Now, back to the Dow. The important factor that you have here is it's the mediator because, yes, you've broken out like the Nasdaq. However, one small adjustment here to this being the lead-in portion. Here we go, guys. And raising this up to that level of resistance, all of a sudden, we are parked at a level of cognizable resistance on the Dow. Okay, so as you look at the intermarket relations between the S&P 500, between the Nasdaq, and between the Dow, understand how this plays the mediator. Just this internal line here. Yes, you have a differentiated level of resistance, but you can understand it in context as we're coming back down for a potential, let's say, a retest or a confirmation here on the Dow. And why is this important, guys? Intermarket relationships, okay? The extent to which everything's going green, Bitcoin's right in the middle with it, right? Or to the extent that, well, everything's going red. Are we parked at a macro broad-based level of resistance? Are we parked at a level of support? Certainly that was important at this level down here. You guys know that. Are we expressive of bullish patterns or bearish patterns? These are the types of questions I want you to focus on, including the nuance of a not a hybrid pattern, but it serves as mediator. You understand how there's a level of resistance broken out of on the Dow, and also there is another clear argument that we are parked, boom, right at resistance. The week of the Jackson Hole Summit. The big guys get together to talk about big bucks. Guys, wanted to bring this to your attention. And yeah, guys, this is it. This is a good week to be trading. Man, I wonder who is going to hedge the Jackson Hole deal. You guys going to hedge the Jackson Hole deal? I bet you I am. I bet you I'm going to hedge that, and I'm going to hedge every CPI report that could possibly be thrown in my general direction. If you don't know how to hedge, you got to join VIP. I'm going to tell you guys, it's important. That's it, guys. Wanted to bring you a good video. We could have streamed. Can you tell I'm feeling better? Yes, I'm feeling better. First time I got a seasonal cold in 4 years. I don't know, guys, but it's I'll take one every 4 years. Not bad, but we're excited. I'll be streaming soon. I'm just so excited about the VIP, guys. We'll get this going, and let's trade. I don't even have to tell that to the VIP in the back. One more shout out to all the VIP. And I'm going to tell you, look at these charts. Look at this chart that is money. That is money, especially if you understand what that chart means. I'm telling you guys, you guys rock it. You just rock the house, guys. This is London with Bitcoin Spike. We're going to be trading, and if you are a trader, guys, get with it. Get on the bus, off the bus, do something. Let's trade. Let's make some money, guys. This is a good market. Going to be a great week. Watch this pattern. Watch this pattern, guys. One final word. Watch these patterns when you see them. Has a lot to do with that chart that I just brought up. Leading, expanding diagonal with Elliott Wave International. MACD looking good. If the daily can get on board, we may be sinking our teeth into some longs. Guys, it's London with Bitcoin Spike. Take care of yourself. Hope you had a great weekend. We'll talk to you soon. Thanks so much. Bye-bye.